Good morning, good afternoon, and good evening, and thanks for joining into this webinar on 3 ways that AI improves your interim audits. I'm JC, and I work over here at MindBridge, spending my time thinking about how to improve the audit methodologies and processes leveraging analytics. I've spent over 20 years in finance and accounting really delivering on analytics, and we want to do the same thing here, but amp it up a little bit by adding in AI. So we've got a short little agenda for you. We're really going to focus all of our time on point number 2, using AI to improve the interim audits. But first we need to know a little bit about what AI Auditor does and what MindBridge does. And finally, we need to also help set you up for success in delivering a roadmap for you and your organization. So let's dive in just very quickly on what MindBridge AI Auditor is, because this is an important piece on how AI can really improve your interim audits. So AI Auditor was designed to be built around artificial intelligence and machine learning, dragging in all of the information about that business and about that client that you're going to work with so that we can get 100% of the data in and analyze it for you and augment your judgment, the auditor, the accountant, who's really tasked to understand that data and whether there's a risk of material misstatement and whether the financial statements have been fairly represented. And as part of that, what's going to happen is you're going to drive a different level of reasonable assurance. You're going to be able to really take all of these insights and really understand that client in a way that you probably haven't had in the past. And most importantly, it's about getting to the job as effectively and as efficiently as possible to identify those areas of risk early on. Part of the reason why you do interims not only is to spread out the workload so that you have that efficiency gain, but also to really start focusing on where do I need to spend time doing further testing? Where do I need to go to pick my specific samples and my selections to actually go and do some of that field work? So what AI Auditor is going to allow you to do is really do all of this at massive scale with amazing analytics powered by artificial intelligence and machine learning. Now, why this is important is because a lot of times today, people struggle to use traditional computer-assisted audit tools to be leveraged in their interim audit process. That's because traditional tools tend to be a little bit more cumbersome. They take a little bit more time and energy to understand, and really you have to become an expert in them to really make a go of it. So it's really hard during that fall time period when a lot of folks are working on getting ready for their interims, for those that are at least going to be December 31st year ends. They're spending all that fall period really getting organized and getting into the client. They don't have time to run multiple different parts of the tool to get to the answer of insights. They really want to be able to get to that insight really early on and really spend the time focusing on what matters, which is finding out, especially on the income statement, how is the data trending? How is the business looking? So traditional CAT tools tend to be a little bit more cumbersome. They also tend to be limited in what they're able to really look at, whether it's because you have to do individualized tests across multiple pieces of data, or because it just has a more rules-based infrastructure, really not stretching the envelope and really leveraging new age and ready-to-go technologies like artificial intelligence and subcomponents like machine learning or natural language understanding. And so what AI Auditor does is it gives that user, that human, the ability to really power itself by being augmented by the AI. And in this case, what AI Auditor is specifically about is actually bringing together all of those sort of traditional rules and expertise and frameworks that you're used to, going and looking at weekend posts, going and splitting out and seeing what's across and above in an individually significant item amount or material amount, going and looking and seeing what things were done on a weekend have last 3 digits and nines. So all of those things that you're used to testing for and you're used to looking at. But now imagine if you could, in an ensemble, look at, well, what are the other impacting factors? Statistical models, like some of you may have used Benford's Law before, or other types of regression testing, or leveraging things like machine learning. So when we bring all of these things together and we link all of those different individual analysis points or different characteristics of the data, you're getting a very accurate picture of where things are at. And we try to do this in a very explainable way, being able to really understand all of the data. And again, our big value here is that you start with 100% of the data and you take that through the process and find the insights so that you're able to focus on just the things that matter. Now, when we look at how do you actually deliver on this, we're going to talk about the roadmap to you getting engaged, but really it does come down to the ability for any user, any accountant, first-year associates, second-year associates, interns that you hire just for the busy season. Everyone can leverage this solution in a consistent and effective way. As mentioned, it does pull through and look at all the data, and it allows you to really create, save, and share all your different tests and logic so that you can have a firm ready to go, everyone singing from the same song sheet. Now, we're going to dive into how this actually starts to transform your audit, because the foundations are really important in what are we trying to achieve. Well, usually in the interim process, whether you're doing this at the 6-month point or you're doing this at 9-month point, and for those of you that are, getting ready to think about in clients that you have that have December 31 year ends, you have a very short time period from now to that point where you might do a 9-month interim. And what are you really trying to do? Well, you're trying to make sure that you've got the right scope for the audit. Sometimes you'll already have finished your continuance letter or your engagement letter. So really, this is the first time you're really going to start looking at the client's data in a lot more granularity than just looking at a financial statement. Now, we can debate that point even further. How much data could you ask for the client before they become a client? But let's make that assumption that the interim audit work is going to be surrounding, we're ready to go, we have, say, 9 months worth of data. Now, what's critical in this whole process is that you can actually clearly identify the data that you want to look at. And again, most interim work is going to focus around income statement. So I'm going to spend a lot of time there in terms of assessing how the tool can help get you there. Let's dive right into the AI Auditor and make sure that we look at how this capability can be used in the most effective way. Now, I've got an already pre-created engagement with some data already loaded, and I'm going to use this just as a foundation to set the scene for really how this is going to help. Now, what AI Auditor does is it ingests all of the data you can possibly want to pull in. You can notice here in this pre-completed sample that I've got for you, I'm looking at not just the current year's worth of data, but I've actually gone back and posted prior year's worth of information. As I dig into the actual analysis, I can see a lot of high-value information right as I get in there. So when you think about that first point in time, when you're starting to get into your client's business for that next engagement, doing that interim work, imagine you've already used AI Auditor, you've already got all this data, upload and use it in the right way to be able to see things like this risk score and being able to see where that risk is happening, both from a timing perspective, right? Being able to drill in and see where over time you might want to spend a little bit of additional effort, be able to scroll through those time periods, shrink them down into things that are a little bit easier to review, or looking very specifically at what account groupings, what areas within my various elements. So here I can see there's a slice within my expenses where I'm probably going to want to go and see what's happening here in terms of these sort of more lime green. Obviously, when we think about looking at the income statement details, really a lot of those expenses are also being processed through my accounts payable. So I may even want to go look and see what's happening on my liabilities section of the general ledger of the statements to really get a picture of both the expense side as well as what's happening on the payable side. Now, this color shading helps me see where things are roughly at, and I can single click point in and go and look at the underlying details. But a critical piece of this is usually looking at the data as it's trending over time. So being able to scroll through a balance sheet view or an income statement view, and specifically within that, going and looking at the relative information that might be interesting. So how are my expenses tracking year over year? Going down and actually looking at various performance indicators and ratios. So for instance, how is my gross profit trending? How are my SG&A expenses trending as a percentage of sales? And not only being able to see that on a year over year basis, but actually get a statistical pattern analysis of what are sort of the upper bounds and lower bounds of what the expected range is going to be, and be able to very quickly identify in my business that I'm working with that February, May, and April have these red orbs around their data points, because that they're significant outliers to the expected range. But we can also look and see, well, what was the statistically relevant and seasonality specific trend that the expected forecast was supposed to be? And as I layer that in, I can see that that first half of the year, this year that I'm auditing or I'm getting ready to my interim work on, is inconsistent with what the data says it should be based on a normal continuous business pattern. So this may tell me I've got a little bit of work to do to go and find out why that gross profit ratio is off. I may decide to add in annotations and start getting my team involved really early to get them to go and do some work to identify certain elements of data. So I can ask Alfred to go and review this information. And Alfred could get a notification, and he can come in and understand and add his own commentary right after I've done that, and we can start a dialogue as we're working through the interim process. I scroll over, see again within that same set of information that my actual forecast and my reality for the current year on things like SG&A is actually looking relatively healthy. So this might be a positive signal. Again, what we're trying to do is assess that risk, understand the trends that are happening in that business, so that when we plan what populations we're going to go look at and spend more time on in the interim and then in the final audit process, we can do that with ease. These ratios and these trending graphs can be completely custom tailored to the types of ratios and the types of specific statistical analysis that you want to do. And you, as users, get to create those, put them into a library, and have the entire company running from the same type of playbook. This means that if you have certain industry niches, if you have certain information that you always want to look at on every single engagement, you can start creating an effective platform for your users to come in and all be looking at data the exact same way. You didn't have to teach them how to script, you didn't have to teach them how to code, how to process data, how to do analytics. What you do is you show them the results, and really what you're doing is now guiding them to the types of information that's interesting. So in this case, a user would typically see those red orbs and right away say, this might be quite interesting. Now, what this is really all about is now talking about how do we get data in and make it more effective to do more work in the interim. Now, we're going to do that through walking you creating your own interim analysis. So we're going to go ahead and create a new container. As I mentioned, we've got these libraries of base content that you can use, and you can extend these to any specific niche, any industry, any specific account groupings that you want to have. So we very quickly go in and we add that library. We can add in the various industry codes, different information that helps contextualize the data for the system. And again, we might want to add Alfred. And now we've got a user being added directly in. Now, what type of analysis are we going to do? We're going to do this interim analysis. And what the very next step is the data that we need to go and look at. Now, what's really impressive about the way that this solution works is you don't even have to be finished your account mapping or your account grouping in your engagement management software if this is a net new client. We can actually help you along the way, and I'm going to show you how to do that really, really quickly. So what we are able to do is we're able to drag in data live from an existing source like an Intact or QuickBooks Online, or drag it in just from a regular flat file, from a comma-separated value file or a text tab delimited file or an Excel file, and really just get that data into the system. And we're going to show you how some of this magic works. So as I go in and I look at this data, I'm going to go in and pull my interim date. So I'm going to pull in the first 9 months of data. And the system's going to immediately say to me, hey, wait, we need a bit more information before we can process this. Now, AI Auditor is designed to go and look at data from any type of source, but every once in a while it does want to confirm that we got the data right. So we use our artificial intelligence capabilities to actually propose what we think is the right column mapping if we're not entirely sure. We also look at the data and we review to see that it makes sense, the shape and the patterns make sense, see if there's anything out of sequence, make sure that the transaction IDs, there's a level of integrity, that the debits and credits balance, all of these types of things. We do all of this in seconds for even thousands and thousands of data rows. What the system now is saying, are there any specific things you also want me to look at? Is there a material value or a value that we would flag for every transaction that goes over a certain amount? I'm going to put in $2,500 here. It also wants me to add in potentially some keywords that I might also want to look for. So maybe I want to look at this and find out if anyone did anything with a special type of entry. So I just type in the word special, and it will now look at any time, anywhere within the entries that's used, it will flag that for me so I can look at it in a little bit. So now, as I mentioned, what happens is you could be working on your data just after you sign that net new client up and you want to get going, you want to do an interim, you haven't even finished your account grouping in your engagement management software or your working paper software. Our system has already done a major step for you. It's already classified every single account into a natural account hierarchy, which you can then use to go ahead and finish that mapping process to your groups as it sits in your engagement management software. So it looked at things like accum, amort, vehicle, it looked at the account number, and it said, well, this probably is in my assets classification and is likely to be inside of accumulated amortization. It sees things like roofing material, again, starting with a 1, likely to be an asset classifier based on looking at all the other data. And it says, well, this is probably going to be raw materials. So I can do a quick scan of all, say, in this case, 97 account entries for my client. I can do that quick scan, just kind of go through, make sure all of them are right, and I can validate it. So huge quick win right away. I got this report from my client, just a straight export of journal date of general ledger entries, all the journals that are going through, including those batch entries, maybe from subsidiary ledgers. I loaded it up, and I immediately have an account grouping started to go put into my working papers. Now, that's not the only thing that's really interesting. What ends up happening is I can actually go ahead and now load in things like my opening balance and my year-to-date balance, and it will actually do all of the different types of work to do some of the balance checking. So I'm going to go through and load in my opening. Again, it's going to verify that I do have all the right information. Now, I made this one a little bit funny so that it prompted me to actually go and do some work to drag that balance column over. But most of the time, we can actually depict all of that information right out of the data. So again, you add all of your different pieces. You can decide what level of detail and what level of granularity you want to go through. We'll just add in that interim closing data. And of course, as you saw, I can have multiple years of data loaded. So as I'm going through this, it gives me the ability to actually go ahead and drop that data in, all those years, and then I can have all that wonderful trending that you saw that I was just going through in the pre-baked one. So now I'm ready, but isn't this interesting? There's actually some new accounts. So what's great about this, as you're working through the system, the other thing that's happening is every time you add a layer of data, it's validating and fact-checking for you. It's not all that uncommon for clients to add new accounts throughout the year, maybe restructure some of their bookkeeping process. This is all a way for us to actually show all the different information in all the right ways at the right points in time. So as I add those opening balances, closing balances, it's reminding me that there's other things that are here. So now I'm ready to go. This analysis is going to go through what we call our pipeline, and that pipeline is going to assess every single transaction in this interim set of data. It's going to look at all the transactions and specifically look at every single line item, every entry. It's going to score those across, in the case of general ledger, when we're doing general ledger interims, across 28 different characteristics. Again, some of those are going to be your basic rules. They're going to be based on looking at things like, was it posted on the weekend? Was it a manual entry? Was it right at the end of the year? Was it at the beginning of the year? Is it close to a period end? All of those sort of traditional rules. then it's also going to run a series of statistical models, various regression tests, make sure that statistically the data makes sense, using things like Benford's law to really identify, are there distributions of numbers that are outside the sequence expected in a traditional ledger, in a normal ledger, in a normal business operation. And then we get to the really important ones that really are so much further ahead in terms of what we used to do, which are all of the machine learning concepts that are built into AI Auditor. And so what the system is doing is it's going to pick apart every single entry, look at how the monetary flows are working, look at all the amounts across the entire ledger, across any, thousands or millions of entries. To date, MindBridge has processed well over 3 billion data entries with our clients and their clients' data. And we can do this in really quick time to really get you to the piece that you want to do. So as part of that interim, yes, you're also trying to, streamline your work, but really it's about making sure that you can get to the right answers as fast as possible. So this is going to be scored across all 28 different characteristics. It's going to roll up an aggregated risk score. And what I'm going to be able to do is go in and very quickly and very early pick all of my samples that make sense for me for, in this case, traditionally doing income statement type accounts or groups of accounts to do my field work for interims and really process all of that data early. It's going to log that you actually looked at those. It's going to put them into the audit plan. It's going to identify the risk as they were as of the time that you loaded the data. So again, this was 9 months of data. And as we roll over, I'm going to show you what that delta looks like and how that works. So here you can see at the first part of the year, just looking at those first 9 months, there's about $9 million of monetary flow going through the business. There's 42 transactions that are flagged as higher risk. There's just over 700 transactions that are 700 transactions that are flagged as low risk. I can see when they're happening, and as you saw before, I can see where they're happening. So which account groupings are potentially at risk. Now, depending on how you do your audit procedures and the type of methodologies you follow, you can very quickly go and grab last 3 digits as a simple test. I want all of the transactions that triggered last 3 digits. I can go and look at my manual entries, if I have any. I can go and look at anything that's over that materiality threshold that I set, which was obviously quite low. But very quickly I can see all the different characteristics and how often they triggered within my data. Again, if I have all that historical data, it will actually trend everything out. It will push it across time, and all of those statistical models and key ratios are automatically processed for you. So imagine you build the playbook in the library, you get it all set, and for every single type or every single account that you have that's in the same industry, or just generally speaking, all of these things can be pre-wired within minutes to go and start building that view and flow of data. Now let's talk about the risk assessment a little bit more in detail, and then let's go into how are we going to pick that sample. Because again, a big piece of the interim work is, or the reason to do it, is to sort of offload some of that time from the busy season, but also make sure that we're really quite aware of what's going on in that business. So again, I can look at the overview, I can get its view of where the data, might be. Obviously, I might be focusing on things like expenses and revenue as part of this process to do my interim work. So I can very quickly go in, and you can see it's already starting to build a filter set. So here's all of my operating expenses. Now, I might also want to say that I want to look at not just if the account is part of the operating expense classification, but I also want to know very specifically, did any of these trigger, let's say, the expert score, or are they outliers, or are they unusual amounts? So I can very quickly go and pick and add to my list and apply that through. And it goes from 700 items down to 109. So very quickly I could say, this is part of what I want to look at from expenses. I want to look at anything that triggered my expert score, my outlier, and my unusual amount. From within there, I've now got 100 transactions to potentially sample from. I'm going to go and using my guidance tool or however I come up with my magic number, I'm going to go and pull a sample size of 40 out of those. Now what the system is going to do is it's going to very quickly say, okay, we're going to go ahead and associate that 40. It's going to try to take any that are in the high risk bucket. So this means that what high risk is to AI Auditor is it's hit enough characteristics that you're essentially looking at it from the perspective of the more compounded risk. So was it a manual entry? Yes, okay, that might be risky. Was it done on the weekend? Oh, it was. Is it in the top 2% of the monetary value? Yes, it was. Was it an outlier? Did the expert score trigger? All of these things will compound to a level of risk. So it tries to pick anything that's in that high risk category. So that's where they're going to be the riskiest of the transactions for that business. It's then going to take a 60-40 split between medium and low, or obviously up to the maximum in any of the different stratifications. Within those, it pulls a random sample, and you can quickly add those to your audit plan. So what's happened now is I've taken out of my population of 700 or 800 transactions, and now I've got 40 of them already into my audit plan. You can see it will change the status to open. I can go into any one of these, and I can actually assign it to a specific user. Because I added Alfred early on, Alfred can now just actually go in of his own accord, go to the audit plan, and know what we're working on. Now let's talk about the details just a little bit, because I think it is important to understand a little bit about that risk profiling at a slightly more granular level. Even though all I've really wanted to get to is a sample size based on the population, it is important to understand the type of risks that you can now look at with something like AI Auditor and being engaged on an AI level with your data. So I just clicked into one of the ones that are in my audit plan at random. I can see that status is open, so I know that that task is available. I am in fact going to go and push that one and assign it out to Alfred, just so that we know that he's going to go look at it, give him a timeline for when that's going to happen, right? And I can see all of those pieces and see all of the different elements of the information that's going in. I can see if Alfred's left me any comments, any other historical items. So I very, very quickly get to go in and see all of that data with ease. If I'm looking at that same data set, and again, looking at it from the perspective of, we were in expenses, right? So looking at expenses, I can see those open items, and I can go into the details again and say, well, what else about this transaction is quite interesting? Well, there's 3 line items to it. It looks like it appears to be my utilities bill, right? So it's a hydro bill. But what's interesting about this transaction is it was a cash expenditure. Yeah, that makes sense. I'm paying my utilities. It was actually in the, it triggered the material value because I put that at 2,500. It actually triggered that. And specifically, it was these 2 line items, obviously. But here's where it gets interesting, where the machine learning starts kicking in and giving me some insights. So it's telling me that it is an unusual amount. It is an outlier. It didn't have a rare flow from a monetary sense, which means the way that this type of transaction has happened and occurred in the past for this business seems to be fairly consistent. But there is a moderate level or a medium level of risk that the flow is actually inconsistent. So not anything specific, but it's giving me a slightly weaker signal. As you can imagine, you have this for every single entry, every single transaction in the company, in the company's books. So when you think about how does this really affect you, well, obviously in your interim process, part of it is balancing that workload that I keep saying, but a lot of it is also just really understanding the potential risk areas and what's happening in the various elements. So I'm looking at an expense line, utilities, I'm seeing how that's communicating with other accounts surrounding it in the overall transaction, and I'm getting a better understanding with these various control points of what's actually happening in that entry or within that transaction. So it's a really great way to very quickly get there. Now, again, a lot of the reasons and a lot of the time that you spend is making sure you have the right samples. So again, ways that AI can help you here is by making sure the population makes the most sense. So those machine learning algorithms are really critical to understand. We've got different types of capabilities of machine learning, but suffice it to say, we're looking at that signature of the data pattern of the bookkeeping process in the business, and we're going to show you anything that looks to be a little bit suspicious or anomalous, and it's going to do that through these machine learning algorithms. And a lot of times we want to do that based on having preset filters that we can go and do the right level of testing. So I'm going to go in and see if there's any revenue that's been reversed. And what I get out of this is I can quickly go through all of my tests. You know, that was one on, was there any revenue reversed? No, in the first 9 months hasn't been anything reversed. That's fantastic. I can go in and I can look at anything that I've pre-saved myself, any that my organization has saved for me, so other tests and procedures and filters, or anything that MindBridge suggests that might be really interesting. So from some of the assurance side, I want to see anything that has a high impact outlier, or I want to go look at anything that's an unusual transaction. And I can very quickly just pick on that, add it to my list, and apply it, and I can see what type of population I'm looking at. So now these are the highest degree outliers in this bit, or unusual amounts in this business that I'm transacting. So what I'm going to do is I'm going to select them all really quickly, and I'm going to add them into my audit plan. So I'm going to create some tasks. This time, now I'm going to introduce a new person. I'm going to add Michael to my mix. Maybe he's got some specialty in the types of things I'm looking at. Again, give him a couple of days to go look at it. I'm going to suggest that this is my high degree unusual amounts. And then I'm just going to say, you know, please verify in the field work. So now what's happening is every time I do one of these types of actions, I look at a population, I either use intelligent sampler or selector, and or I go and manually grab these and select them. What's happening is it's building up my audit plan. I can see exactly how many transactions I'm looking at, how many entries I'm looking at, and it's going to give me all the ones where I've assigned them, and it's going to tell me what the task was that I actually assigned out to those individuals. So very, very quickly, imagine you have a business that does a high volume of entries, a high volume of transactions. Imagine if you look at this data in seconds. Now the fun part is that you're going to go ahead and do all these processes, many of them very similar to the way you do now, but you're going to have way more accurate information, and you're going to be able to actually go ahead and clear all of these. You're going to follow through all of them. You're going to make sure that the audit plan makes sense. Now here's where the exciting part is. So the exciting part is that you can now actually then take that interim work and you can actually go ahead and roll it over into your new end of year analysis. So I can now go through and make a new general ledger analysis, and what it's going to do is it's going to look at my interim data. Apologies, wrong click. It's going to look at my interim data and it's going to allow me to roll this over. So I'm going to go in and grab that new full 12 months of data. In fact, I could give me 15 months of data, so I'm going to include all the last 12 months plus the first 3 months. And you're going to see some remarkable things happen. Again, it's going to walk me through any of this data that I need to look at, review, map data through. All the columns are pre-mapped. Everything's in the right order. All of this looks to seem to check out. I'm going to keep all of the rest of my engagement settings, all of my suspicious keywords, but you can actually add things now. So I could add new keywords. I could change my material value. And what's great about this is it's going to go back to the interim work and it's going to validate all of the information across time. What you'll notice is between when we started the interim and now when we're doing end of year, there's now 3 more accounts that are unverified. So I can go in and see, well, what's happened in that business? Oh, they've added a new debt write-off account. They've added data into director's fees. They've added management salaries as a different line item. These might be things that are telling me a story of things I've got to now do in my end of year field work. I'll accept those changes in my mapping and in my grouping, and I can go ahead and start that overarching work. First, I'm going to add in my closing balance just to highlight a couple of other reporting pieces. Grab the closing data, and here we go. So that same process is now going to happen. It's going to allow me to look at all of the data. It's going to see it roll over, and it's going to do a view of that data. So this is where we're now getting ready to do the rollover. So I know this was 3 ways to, improve how AI will improve your interim audits. I think interim audits and the final work is a little bit of one body of work, but let's recap some of what I've said already. Number 1, right? Biggest value right away is that you can assess all of the information, whether you're doing a 6-month, a 6 and 6, whether you're doing a 9 and 3, whatever frequency you do that interim at, we can ingest all of that data. We can look at all of the data coming through the various subledgers, payables or receivables, all the general ledger details, and we'll run it through the entire gauntlet of classification and criteria to understand what's potentially risky in that data set. So number 1, we devour all that data. All of it comes in, we assess 100%, all the entries, roll it up to the transaction, and give you as much insights as we possibly can. Number 2 way that it improves the interim audit process. Because it's done all of that work in terms of ingesting and devouring the data and scoring it, now you're able to really look at a risk-adjusted view of how that business is transacting over time. If you add in multiple years of data, so I add all the historical years as well, you get an even deeper picture, right? You get to use those ratios and the seasonal autoregressive interval moving average, so SERIMA is the short form for it, to be able to do a predictive holistic view of the key metrics of my business. So I can see all of these things, hopefully in minutes, if not in seconds. And that's a really big win. And then finally, you can build your audit plan now. Now I'm giving you a bit of a bonus card here. I'm giving you the 4th way that AI is going to improve this. And that is, now that I'm doing this rollover, I'm essentially now adding in the last 3 months of the year, and I'm adding in the first 3 months of the next year, and I've already done all of that work in the same system. You're going to see any transactions that have modified in risk, that have been changed, that you've already pre-cleared as part of that interim field work, could get highlighted. It's going to go and give me any deltas that are really important for me to go look at between when I did the interim and when I did the end of year, when I did that final work. And to us, that's one of the biggest reasons why you really want to look at this, because you get that standard platform to be able to move through. There's a whole bunch of other features and functions and goodness and specialness that comes along with leveraging AI Auditor and leveraging AI in this process, but a lot of it comes down to you're trying to find not only an effective way to balance out your workforce, which means creating efficiencies where you can, doing work early, but now you're actually able to do that with a high degree of effectiveness and assurance, because what it's doing, and I'll just go into the results here because they're ready, is it's going to show me the different scope over time. So I've gone from that 9 million in turnover to now, or monetary flow, to 23 million. So this business has got significantly bigger. I now can see that the transaction profile has changed a bit, right? I've got a bit more monetary flow going through in medium risk. I've got a couple of transactions that are hitting the high risk. I can see when those started to happen, right at the end of the year, right at the beginning of the next year. So again, think about your interim audit process. Not much changed at the beginning of the year. That's great. And we'll look at that just a little bit more in detail. But I can now see, remember those new accounts, right? Management salaries, bad debt conversion. All of a sudden, there's some really high risk things here. And that makes sense because we saw them come in as accounts. We didn't know that they maybe were there. Sometimes you don't get all the details in the same way when you're just grabbing trial balances to do some of the interim investigation work and just looking at the core stats. We're digging into the bowels of all the ways that business is transacted. And by seeing these new accounts, we can see the higher risk areas. We can show you where different things are happening, even in revenue, something has changed in profile. So we reran all of that data. But what's great about this is right out of the box, what you end up getting is the roll forward report. So how did that 9/30 or the September 30th GL, the first 9 months, compare to the whole 12? And just as you would imagine, being accountants, being able to just download that report very, very quickly, being able to download the trial balance check report to General Ledger and to be able to look at any of these in Excel. All of these reports just really simple and easy for you to review and to be able to use, right? Our whole goal here is to make it really, really straightforward for you to go from signing that continuance or net new engagement to start doing field work early, to be able to look at those and how they progress over time and get to these types of reports which tell me exactly where we are. So let me just go back into the tool for one more second just to show you the last little bit of that, which is I've now looked at all of those pieces. I've looked at my trending bits. It's basically giving me all the core pieces of information I'm looking for, and it's allowing me to look at not only the data in its now full form, but it's also collected all that information around the audit plan. It's still there. So I can actually see the details and see if any of that risk score has changed, which is great. So I can see what's happened. I can see what other work I've done. So now, as I get ready to do the end of the year work, I've already got all of those samples and selections I've already done. Now I can focus a little bit more on balance sheet, or in the case of, seeing those new behaviors and expenses for bad debts and for management salaries, and then this other revenue that came up in that risk view, I can now actually see exactly what additional work I'm going to want to do to satisfy that opinion that I'm creating for my business. So there was a lot in there. Data ingested quickly, allow you to see the data in more granular detail, giving you the ability to start looking at building your audit plan early, focusing on clearing as much of the population as you can to balance that working time, and then looking at things like rolling it over. So how AI does this is it looks at all the data, it looks at all the patterns, and it really tries to help guide you through some of these pieces. Now, of course, the big question is how do you get started? Well, you get started by creating a roadmap for your team. And this is a bit of people, a bit of process, and then obviously technology. So how do you become AI enabled? How do you get ready? Well, we think there's a pretty short roadmap to get you there. Doing some of these steps can take as little as 6 to 8 weeks. So there's lots of time before people start their busy season for December year ends to do some interim. A lot of it comes down to understanding how AI could work in your practice. Great, you're almost done the first step just by tuning into this webinar. Then start planning for how you're going to leverage AI in some of those interims. And then obviously the thing that we also bring is ask us, right? We've got CPA and residents on staff waiting to help you get through some of this process. When we think about breaking those steps down a little bit further though, we think there's some critical things for you to think about. When you start planning to do an AI-based engagement, you really need to start talking to your client about the fact that you're going to be enhancing the way that you perform the audit. You're going to enhance it by asking for a little bit more data. Our ideal state would be that you ask for 3 or 4 or 5 years of historical data, so we can give you really accurate trends on all of those key performance indicators, those key ratios, but also remind your client that you're adding value into their service. A lot of times they want to know that you're trying to go that extra mile to help make sure that those financial statements are thoroughly reviewed as part of the audit process. Internally, we need to think about how that's going to change. Do you have a journal entry testing process today? Do you have a revenue testing process today? Do you look at expenses this way or that way? When you start thinking about it in terms of AI, it's about how do you translate that business knowledge into the tool, creating some pre-built ratios, creating some pre-built filters if they don't come out of the box with things that MindBridge already assumes that you're probably going to want to look at. So that means, a couple of additions to your engagement letters or continuance letters, talking about the fact that you're going to be doing some of this. Explain why extracting more value, more data early is going to give them more value long term, and then pull as much data as you can from them. Because what we want to do is really show you as accurate a picture of the risk profile as possible. There's a little bit for your team to do as well, which is to become a little bit more ready for that ask of more data. So being able to understand the different types of data. There's a great accelerator course. If you go to mindbridge.ai, you can actually go and see that course. We have a course on being more data proficient, being able to use data better. And then, of course, getting ready to actually do the work. So what's really important? Well, it's important to start getting that data in, start understanding the trend analysis that we create, and start building up your industry-specific libraries. Now, why is that important from my perspective? It's so that you can start building your unique value proposition to your clients. AI Auditor is a tool and an application and a platform kind of all in one. It helps guide you through doing some of these steps that you're going to do for your interim work and then for your final end of year work. But what's great about it is you can actually build firm-specific processes and tests and models and idea and concepts right into the solution. So you can build filters that look for, revenue or expenses a specific way and get to the population that you're going to test from. It allows you to start building a playbook and a report output with all of those graphics being able to be annotated and shared out with your client if you want. So you just really have to think about how is that going to fit in. And the final step in that is really starting to integrate it into your process. So as we've said, there's sort of key areas: getting the interim field work done, early identification of risk, better plan your audit by knowing more about the data from an unbiased view, and then obviously getting ready to do things like that year-end rollover if you've done an interim to start that year-end field work. And really, where do we bring some additional value is we believe that this is an evolution, not a revolution. This isn't rip out everything you've done and radically change your business. It's about guiding through the process as a journey. And that journey needs to come with folks that are AI experts, that's us, AI auditor experts, so experts in the tool, that's your customer success manager, CPAs, we have those on our staff to help you think through what processes and methodology changes do we want to make and what can we adopt in that short time frame, 6 to 8 weeks, and then how can we look at doing something a little bit more as we get ready for end of year. And then we also have customer adoption experts and change management experts. Depending on how big your firm is, depending on how your firm operates, change management is going to be a piece. Let us know that you're ready to go to that step, and we'll bring those resources to bear and help have that conversation with your senior leaders, if you are the senior leaders, with the rest of your team who's going to be responsible for running this application. But really, we think there's a lot of great value there. So how would I summarize our time together? Well, I'd say that we talked a lot more around the types of techniques and capabilities that can get you through this interim season a lot more effectively. If I just spend maybe 2 minutes on really talking about the AI importance, it comes from tools that help augment your judgment. It's about getting you the right information with the right level of clarity, with the right level of explainability. The way that we work in AI Auditor is the minute data touches the system, we're trying to understand what that data is. We're going to try to guide you to the right end game. You saw me see some new accounts pop up. You saw me map them incorrectly or incorrectly, meaning into the right slots inside the hierarchies. A lot of that was done based on artificial intelligence capabilities, where we scan all the data, the account numbers, the account description, the type of data that's flowing through the accounts based on the entries, and we recommend where that should go. So even if you haven't finished your engagement or your working papers account grouping, we can do a lot of that work for you. Big win for AI right up front. When we start processing the data, so when we're actually looking across all those 28 different characteristics in general ledger, when we look at the 24 that are in payables or the 22 that are in receivables, a lot of those are machine learning oriented, which means they're part of that AI family. Why is that important? Because it can take a person the equal amount of time as it took to enter in the data, so that would be the full complement to the accounting staff, just to unpack what happened in all of those transactions. Computers don't sleep, they just keep working. So when we assess all of that data, we really do give you a picture of what the data pattern looks like. We make it so that it's easy for you to see what those risky points are, and we do that through a lot of those machine learning algorithms to show you just how far outside, whether they're outliers, whether they fail the expert score, whether they've got rare flows of information. And then finally, we have the the whole ability to ask questions of the data, to further filter and segment that data, and make sure that we're leveraging a lot of that capabilities. And as you work with the system, as it brings in data and rolls it over, it goes back and sees if anything else has changed. So what I'd say is you're going to end up with a couple of action items out of today's webinar. You're going to start thinking about how is this going to redefine your interim process, and how it's going to redefine the way that you look at reasonable assurance, how you're going to maybe adopt something like this and make the changes internally. And obviously our goal is to keep learning. Look for a product that's real, that's got real customers having huge impact into the industry. And I'll leave you with one final comment in terms of the slides, and then we will go through some of the question and answer, and I'll ask the team to help me and support me there. AI isn't going to replace you auditors, but we definitely believe that auditors that use AI will replace those that aren't. And that's from my good friend, John Bednarek, another J, but this time a JB. And we really do believe this. This is about moving the needle evolutionary, incrementally, at a pace that's acceptable for you. But over time, we can all agree that AI is here and it's starting to disrupt our space, and we need to be ready for it and we need to plan for it. What better time than when you are slightly less busy than a traditional busy season for December year-end businesses. So thank you very much for that. Have a great afternoon, evening, or morning, wherever you are in the world. Thanks a lot.